This is Matthew Cratter from Trade University, and today I want to talk about the golden cross that just happened on the Bitcoin daily chart. For those of you who don't know what a daily cross is, I have here a daily chart of Bitcoin versus the US dollar. We have two lines drawn on it. The first one is this dark blue line, which is the 50-day moving average. The second is the red line, which is a 200-day moving average. And a golden cross occurs when the blue line crosses above the red line, as we've just seen happen in the last, it actually happened yesterday. If we look here, we can see the 50-day moving average was at 45,978, 200-day moving average at 45,886. So we did get that crossover. Now the opposite of a bullish golden cross or crossover, moving average crossover, is what's called a death cross. And that's what we had back in June. And I did cover this in, there was a lot of press around this saying that this was the beginning of a bear market. People like Peter Schiff were saying that Bitcoin had just completed a head and shoulders pattern and was basically headed to zero. That's where the neckline was. If we take a look at the date of his tweet, June 22nd, he's actually a very, very good contrarian indicator. June 22nd is this day right here where Bitcoin bottomed and has gone straight up since then. What I argued at the time in this video about the Bitcoin death cross was that we were still in a bull market, and as such, death crosses are not very powerful. This turned out to be true. Once the death cross occurred, it was a very bad time to go short. We did sort of trend lower for a couple weeks, and now we've bounced much higher than we were when that death cross occurred. So I should say, in a bull market, golden crosses work much better than death crosses, and the golden cross is what we just got. Now, how do we know that we're in a bull market? Am I just assuming this? I'm going with this assumption simply because traditionally Bitcoin has been in a bull market for the 12 to 18 months after the halving. We just had the last Bitcoin halving on May 11th of 2020, so we're still within that window. And just with the increasing adoption and everything we're seeing, I think it's quite reasonable to assume that we're still in a bull market. This might be sort of a double bull market as we had in 2013. I've made a video discussing that as well. But what's important to realize here is that in 2017, in the fourth quarter, was sort of an analogous time. Bitcoin in the fourth quarter, call it from the end of September to the end of to the middle of December, it went from $4,000 per coin to $20,000 per coin. So we got about a 5x there. If we did a 5x from here, it would obviously take us well above $200,000, which is still my target for the end of 2021. If you're finding this video helpful so far, be sure to hit that subscribe and like button, and also share the video with a few friends. So it's important to look at previous crossovers. We just discussed the parabolic run-up in the fourth quarter of 2017. After that, Bitcoin entered what was traditionally the bear market period, the sort of the second half of the 4 years after the halving. So 2018, 2019 were pretty brutal. We did get that death cross at the end of really early in 2018. The market trended down, and then it really entered sort of a sideways consolidation period, which is also what happens. Usually you have a big down move, then you have sideways consolidation, and then you have the new halving. So the May 2020 halving was approximately here, and then we got a bullish crossover, a golden cross. Meantime, during that sort of sideways bear market, we got a couple fake outs. We got a golden crossover here as well. We got a mini one here in May of, I believe that was May of 2019. So what happened at the beginning of this bull market? We got the golden cross right here, and then we really had Bitcoin melt up from under $10,000 all the way up to the mid 60,000s. Then we got the bearish crossover, the death cross that we've been talking about, and here we are back with a golden cross. So that's one way to think about these things. The other way I look at this is, of course, using Plan B's models. He's got a couple articles on Medium that you can check out. He's got the Bitcoin stock to flow cross asset model, which is predicting a high somewhere around $288,000 in this cycle. And then he has an earlier model that has a slightly lower target. There are a couple good charting services that I will link to here that are free. This is a chart of the original Plan B's original stock to flow model, so not the cross asset flow model. And the important thing to realize here, I'm not really going to go deep into the model. You can read the Medium articles. You can also look. I've made a bunch of YouTubes about Plan B's models. But what I want to point out here is that we've never historically had the peak of a bull market, a bull run following the Bitcoin halving without a blow-off top. So we had one, sort of a double one in 2013, 2014, and then we had the famous one in the fourth quarter of 2017, as we've been talking about, where the price of Bitcoin, and this sort of squiggly line with the different colors is the price of Bitcoin. The line right here is the model price. But what I want to point out here is that we've never had the end of a Bitcoin bull market without a blow-off top, where the price of Bitcoin went well above the model price. It happened in 2013 and 2014, and it happened in the fourth quarter, really mid-December of 2017. This is why I think we're still quite early in this bull market. There have been some news setbacks in terms of China kicking out the Bitcoin miners and really clamping down on the use of Bitcoin and other cryptocurrencies. We had the Elon Musk energy FUD, and now we have this infrastructure bill that's still making its way through Congress, and it's unclear what cryptocurrency provisions and restrictions will be in there. So there is this uncertainty. Ultimately, Bitcoin is so decentralized, none of this will matter. It cannot be stopped. The worst case scenario is Bitcoin miners get driven out of the US by this infrastructure bill, and Bitcoin keeps on producing new blocks every 10 minutes. But I'm not looking for the end of this bull market until we have a real blow-off top where the price of Bitcoin vastly exceeds the model price. There's another great website for this, s2f.hamal.nl, which I'll link to. And if you scroll down here, it looks like he updates this daily. You can click on either of these two charts and get a little more granular version. Here is the blow-off top from the fourth quarter of 2017 when Bitcoin hit about 20,000. And you can see that in that run, we got to, well, there are two bands here. I don't know how well you can see it. There's kind of a dark band here, which is one standard deviation away from the model. And then you have a lighter blue, which is 2 standard deviations away from the model. At the peaks, certainly in 2013 and 2014, and went well above that in 2017. It just touched the top of the light blue model. So what we would expect here, we would expect some sort of blow-off top to happen when it reaches the top of this lightly blue shaded area. We can scroll in a little bit more on his second chart, which you scroll down to the bottom and click on this lower chart. That will take you right here, and that gives you a better, more granular reading of the different levels. And we can see here we have this light blue area at the top, which we've been talking about, that I'm looking for a blow-off top to occur at. And we can see that price is actually above $250,000 for this cycle. So that is one reason I'm sticking to my price target of $200,000 for Bitcoin by the end of this year. I think it's a fairly conservative target. Bitcoin can easily go up 100%, 200% in a matter of weeks. Meanwhile, the fundamental backdrop, the real fundamental backdrop, what matters much more than certain countries kicking out Bitcoin miners, is that we're at the end of the long-term debt cycle. Central banks are monetizing the debts of their governments all around the world. U.S. government itself is in very, very, very bad shape as the baby boomers reach retirement, and the U.S. government is forced to make everyone whole on their Social Security and Medicare promises. This in addition to just crazy spending having to do with the pandemic, infrastructure, etc. Whatever the excuse is for it, the U.S. government cannot stop spending. And as a result, the Fed cannot stop printing money to monetize that U.S. government spending. This is the real fundamental driver, the end of the debt cycle, the long-term debt cycle, central banks monetizing their government's debts. No one can stop Bitcoin from using this as rocket fuel. This is the great irony and the great blessing of Bitcoin, that it cannot be controlled by central bankers or governments. Bitcoin, in addition, is obviously extremely scarce, and adoption continues to go up. Bitcoin has an inelastic supply. When demand goes up, there is no more Bitcoin. There's no extra Bitcoin created. Whereas if corn prices go up a lot, people plant every square inch of their farms with a little extra corn. They do it next to their house or in their driveway, wherever. When Bitcoin goes up, the miners still cannot produce more Bitcoin. There's a fixed monetary policy. There's only 6.25 Bitcoin produced every 10 minutes on average. And so Bitcoin has this inelastic supply. It has growing adoption, and this adoption has now spread from retail investors to institutional investors. And one of the other things I'm expecting in the fourth quarter, there's been a lot of rumors about this. There are various large corporations that have been buying Bitcoin and that are going to announce that they've added it to their balance sheet. So this will just be even more rocket fuel as the game theory plays out and corporations stumble over one another to get some Bitcoin. Financial institutions do the same. And as we've seen, this game theory has now reached the level of sovereign governments, with El Salvador adding Bitcoin to their balance sheet. The central banks and the governments that add Bitcoin to their balance sheet first really have a huge advantage over everyone else. And it's actually much more smart to just try to accumulate Bitcoin as a government than to try to stop it. So I'm maintaining my price target of $200,000 by the end of 2021. And everything seems to be lining up fine with the golden cross occurring now, and we're entering what is September has historically been a fairly weak period, not only for the stock market, but also for Bitcoin. We've got just a couple weeks left in September, and I think as we exit September, maybe even sooner, we begin to see the force of the golden cross exert itself, which is nothing more than a chart representation of increasing adoption, decreasing supply, hodlers taking their Bitcoin off exchanges and putting them in cold storage forever, as I've done. And so this is what drives this marginal demand, combined with inelastic supply, is really what's going to be driving Bitcoin in the fourth quarter and for the foreseeable future. I'm going to be out of range tomorrow and possibly Saturday. There's a good chance I'll be able to make a video on Saturday. If not on Saturday, certainly by Sunday. So in the meantime, I hope you have a great weekend. Thanks for watching this video. If you found it helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you on Saturday or Sunday.